Hello, everyone, and welcome. Today, we're going to dive into one of the biggest legal shakeups in recent history, the brand new Income Tax Act 2025, and more importantly, what it actually means for all of us. You know, if you're a tax professional, a business owner, or even a CA student, you've definitely felt the sheer weight of the Income Tax Act 1961. We're talking about a law that's been patched up and amended for over 60 years. It's become this incredibly complex web of provisions, circulars, and notifications. Well, it looks like Parliament has heard the call. The new Income Tax Act 2025 is here, and its mission is crystal clear: to untangle all that complexity. The whole idea is to consolidate, simplify, and really bring India's direct tax system into the modern age. So here's our game plan for this explainer. We're going to look at why we even need this new act, break down its foundation in Section 1, and get a feel for its new structure. We'll also clear up the transition timeline, talk about what happens to the old 1961 Act, and wrap up with the next steps you should be thinking about. All right, first up, a new tax era begins. Let's really get to the bottom of the why behind this massive legislative change. Now, take a look at this. It might seem like a tiny change in the preamble, but it's actually a huge signal. The old 1961 Act mentioned both income tax and super tax. The new one? Just income tax. See, super tax is a levy that hasn't been around for ages. By removing it, the law is basically cleaning house from page one, signaling a clear intention to strip away old, irrelevant parts and create a much cleaner framework. Okay, let's move on to the bedrock of the Act, Section 1. For any new law, this is ground zero. It tells us its name, where it applies, and, crucially, when it kicks in. So, Section 1 of the new Act, which, for the record, is officially Act number 30 of 2025, it sets up three fundamental pillars: its title, its geographical reach, and its start date. The first 2 points are pretty straightforward. The official name is the Income Tax Act 2025. And, just like the old law, it applies to the whole of India. No surprises there. But it's that third point, the commencement date. Well, that's the one everyone really needs to circle on their calendar. And there it is, April 1st, 2026. This is the official go-live date. From this day forward, all the new provisions, all the new calculations, and all the new compliance requirements of the 2025 Act will be in full effect. Okay, so now that we know when it all starts, let's get a bird's eye view of the Act's new architecture. How is this thing actually put together, and how does that structure reflect this goal of modernization? Now, obviously, we can't go through every single chapter, but this gives you a real feel for the new layout. You've got your foundational chapters like preliminary and basis of charge, your core sections on computation, and then you have really modern provisions like the chapter on impermissible avoidance arrangements, which neatly bundles up all the anti-avoidance rules. And check this out. This is a brilliant example of the Act's modern approach. Just look at the new definition of books of account. It specifically, explicitly includes records kept in electronic form, on cloud-based storage. This is the law finally catching up with how businesses actually work today. It's a huge step forward. So we've got a new law and a start date. But what does this mean in practice? This is where the rubber meets the road. Which year's income gets taxed under which law? This is probably the most critical question for every single taxpayer and professional out there. This timeline makes it crystal clear. Let's walk through it. The income you earn in the financial year 2025-26, the one you file returns for in assessment year 2026-27, is still under the old 1961 Act. The new 2025 Act only applies for the first time to the income you earn from April 1st, 2026 onwards. That's financial year 2026-27. This brings us to the next big question on everyone's mind. If a new act is coming in, what on earth happens to the old one? And what about all the ongoing assessments, court cases, and losses carried over from previous years? So, Section 536 of the new act officially repeals the 1961 law. It's being retired. But, and this is so important, it doesn't just wipe the slate clean. It includes what are called savings provisions. Think of these as a safety net designed to protect all the actions, rights, and liabilities from the old system. They ensure we have a smooth, orderly transition without creating any legal chaos. And here is a perfect real-world example of that safety net in action. This quote from the Savings Clause confirms that your old capital losses can still be carried forward and set off under the new law, using the rules of the old Act. The bottom line, your accumulated losses are safe. They are not disappearing. So, with the law officially on the books, the focus now shifts to implementation. How can we, as tax professionals and business owners, actually prepare for what's coming our way?
The good news is the government isn't doing this in a vacuum. The Central Board of Direct Taxes, the CBDT, has already kicked off a huge consultation process. They've put out draft rules and forms, and they are actively asking for input from stakeholders, and yes, that means you, on everything from simplifying language to making compliance less of a headache.
This leads us to some very clear, actionable steps. First, you've got to get your hands on the new act and actually review it. Second, analyze the draft rules and forms. They're the practical side of all this. Third, get involved. Provide your constructive feedback to the CBDT. And finally, start thinking about how to update your own internal accounting and compliance systems to get them ready. All right, so let's do a quick recap. A new law, the Income Tax Act 2025, is taking over from the old 1961 Act. It kicks in on April 1st, 2026. Its main goal is to simplify and modernize. The transition is designed to be smooth thanks to those savings clauses. And right now is your chance to engage with the CBDT and prepare for the change. And that really leaves us with the million-dollar question, doesn't it? The intention to simplify is absolutely there, but as we all know, the devil is always in the details. Will this landmark law truly bring in an era of simplicity and certainty to India's tax world? Well, I guess only time will tell. Thank you so much for watching. We're going to be tracking the rollout of this new act very closely, so if you found this explainer useful, please hit that like button, subscribe to stay in the loop, and of course, share it with your friends and colleagues. This video is for educational purposes only and does not constitute professional advice. Tax laws are subject to amendments. Please consult your professional advisor before taking any action. This is an AI-generated educational video.